As of this moment, Snap Inc. Snap is trading at 7.27, reflecting a slight dip of 0.95% on the day. The intraday high was 7.64, and the low was 7.25, showing a volatile session within a tight range. But don't let that minor fluctuation lull you into a false sense of security. The real story is much deeper. What the public eye is largely missing is the dramatic shift in institutional sentiment, a quiet, almost imperceptible sell-off that has been accelerating behind the scenes. While retail traders might be focusing on the daily noise, a significant number of institutional holders, including some major mutual funds and investment firms, have recently been paring back their positions. Just in the last quarter, we've seen a net decrease in institutional shares held, a subtle but critical shift that belies the common narrative of a stock simply in a holding pattern. This isn't a single panicked exodus. It's a strategic retreat by smart money, and it creates a chasm between the surface-level stability and the underlying reality of a stock under quiet but persistent pressure. The prevailing market expectation for Snap is one of a beleaguered but resilient tech company, a potential turnaround story waiting for the right catalyst. The narrative is well-worn. The company has a strong user base, particularly among the coveted Gen Z demographic, and the disappearing messages platform is a household name. Investors often cling to the hope that a new ad product, a successful hardware launch, or a sudden surge in user monetization will be the magic bullet that sends the stock soaring. But this expectation ignores a crucial and painful reality. Snap's core business model is facing existential headwinds that are far more complex than a simple growth story can fix. The recent Q2 earnings report was a stark illustration of this tension. While the company reported a modest 8.7% year-over-year revenue increase and a 9% jump in daily active users, the market reacted with a brutal 15% plunge in after-hours trading. Why? Because reality fell short of even the most tempered expectations. The company disclosed a technical glitch in its advertising platform that directly impacted revenue, a fundamental operational failure that shook investor confidence to its core. This wasn't a one-off macroeconomic headwind. It was a self-inflicted wound that exposed a deeper fragility in its core ad business. The widening net loss, now at a staggering $263 million, further compounded the issue, highlighting that despite user growth, the company is still struggling to achieve sustainable profitability in an increasingly competitive and challenging digital ad market. The daily trading action for Snap has been a microcosm of this broader struggle. The stock's price has been locked in a downtrend for months, recently hitting a new 52-week low of 6.98. This persistent downward trajectory is a clear signal from the market that the current business model and growth strategy are not working. Trading volumes have remained elevated, but not in a way that suggests accumulation. Instead, the volume reflects a constant battle between those still holding out for a turnaround and a steady flow of sellers, both retail and institutional, who have lost faith. The short interest remains a factor, with a notable percentage of the float being held short, indicating that a significant portion of the market is actively betting against a recovery. This bearish sentiment is further reinforced by the fails to deliver data, which has been elevated in recent weeks, pointing to potential market friction and a lack of available shares for settlement. All of this points to a stock that isn't just treading water. It's being methodically sold down by a market that has grown weary of promises. The macroeconomic pressures, including a potential economic slowdown and a tightening of corporate advertising budgets, are only making a bad situation worse, creating a perfect storm for a company that relies heavily on a robust digital ad environment. To truly understand the predicament, we have to look beyond the stock chart and into the company's foundation. Snap Inc. operates as a camera and social media company. Its flagship product, Snapchat, is a mobile application that allows users to create and share messages, or snaps, that disappear after being viewed. The company's business model is built on monetizing this user base through advertising. They offer a variety of ad formats, including Snap Ads, which are short, vertical videos that appear between stories, and sponsored lenses and geofilters, which are augmented reality, AR, effects and location-based overlays that brands pay to create. This reliance on AR and an immersive user experience is what Snap believes sets it apart from competitors. Additionally, they have tried to diversify with hardware products like spectacles and the Pixie drone. though these efforts have yet to become meaningful revenue drivers. The core problem, however, remains the same: a direct competition for ad dollars with behemoths like Meta platforms, Alphabet, Google, and TikTok. While Snap pioneered many of the ephemeral and AR-based features, the larger players have successfully co-opted them, using their vast scale and data to create more compelling advertising platforms for brands. Snap's Q2 earnings call confirmed this, with management citing an ad pricing error that speaks to the technical and systemic challenges of competing in this arena. The company's historic performance has been a story of explosive user growth, followed by a struggle to monetize that growth efficiently. Revenue has been on a downward trend for the past 3 quarters, and the net loss continues to widen, showing that the company's cost-cutting efforts and revenue diversification are not yet outweighing the challenges of its core business. Looking ahead, the path for Snap is filled with both potential catalysts and significant risks. The expectation is that the company will find a way to fix its ad platform, re-accelerate revenue growth, and finally achieve profitability. Analysts have a wide range of price targets, from a low of 7 to a high of 16, reflecting the deep uncertainty and split opinion on the company's future. A key catalyst could be the successful rollout of new, more effective ad tools or a significant partnership that brings a new stream of revenue. The company's focus on augmented reality could still be a long-term advantage if AR becomes a more central part of daily life, and the recent issuance of senior notes could provide the capital needed to weather the current storm. However, the risks are arguably greater. The most pressing is the continued decline in advertising revenue and the failure to fix the underlying technical issues that caused the Q2 earnings miss. Further macroeconomic weakness could pressure ad budgets even more, making it difficult for Snap to hit its financial targets. Additionally, the increasing competition from TikTok, which has captured the attention of the very demographic Snap once dominated, presents a continuous and formidable threat. The company's ability to maintain user engagement and grow average revenue per user, ARPU, will be the most critical metric to watch in the coming quarters. It's a classic expectation versus reality play. Investors hope for a swift turnaround, but the reality is that the company is facing deeply entrenched operational challenges and fierce competition that will not be solved with a simple fix. Do you think Snap's focus on AR and its younger demographic can ultimately overcome the monetization challenges and competition from tech giants? Comment below with your take on whether Snap can truly achieve a sustainable turnaround. In summary, the market's perception of Snap Inc. as a simple growth stock in a temporary lull is a dangerous oversimplification. The reality is that the stock's persistent downtrend and recent earnings miss reveal a company under severe operational and competitive pressure. The initial expectation of a quick rebound, fueled by the hope of a strong user base, has been repeatedly met with the sobering reality of a widening net loss and fundamental flaws in its core monetization engine. This isn't just a blip. It's a systemic challenge. The divergence between what investors want to believe about the company and the difficult truth of its financials and market position is the central narrative driving its stock price today. The future for Snap will not be determined by its past successes, but by its ability to finally bridge this gap, proving that its unique platform can translate into a profitable and sustainable business in a world dominated by giants.